If you're a savvy investor, you need to know these top dividend stocks to boost your passive income. Welcome back to Bull and Bear Dividend Daily. Today, we're diving into the top 5 dividend stocks you should buy in June 2025. These stocks are high yield, reliable, and perfect for long-term value. First up, we've got Company A with a solid history of steady payouts and growth. Next is Company B, known for its impressive dividend yield and strong financial health. Don't miss Company C, a favorite for its consistent returns and stability. Now, let's talk about Company D, which has a track record of increasing dividends year over year. And last but definitely not least, Company E, offering a high yield and robust growth potential. So, what are you waiting for? Dive into these stocks and watch your passive income soar. Hit that like button, subscribe, and tap the notification bell so you never miss our daily dividend updates. Keep investing smart and stay tuned for more tips. See you next time. Ready to invest in a company that's truly got it all? Check out Johnson & Johnson. With a dividend yield of about 3.36% and over 50 years of consecutive dividend increases, Johnson & Johnson is the epitome of resilience. In 2024, J&DJ reported an impressive $17 billion in free cash flow, returning over $11 billion to shareholders through dividends and buybacks. But that's not all. Their diversified business model spans pharmaceuticals, medical devices, and consumer health products, ensuring steady cash flow and stability through various economic cycles. With strategic investments and advancements in the innovative medicine and medtech pipelines, J&DJ is set to continue its growth streak into 2025 and beyond. Plus, their commitment to innovation and disciplined investment makes them a smart choice for any investor. So if you're looking to invest in a company that's both resilient and forward-thinking, Johnson & Johnson should be at the top of your list. Invest smart, invest J&DJ. Thirsty for reliable returns? Coca-Cola's dividends might just quench that thirst. When it comes to dividends, Coca-Cola is the real deal. They've paid an uninterrupted dividend for over 60 years. Imagine, that's stability you can bank on. With a dividend yield of around 3.03%, Coca-Cola isn't just about fizzy drinks. Their beverage empire, including brands like Smart Water, Costa Coffee, and Vitamin Water, keeps that revenue flowing steadily. In 2024 alone, Coca-Cola reported a whopping $11 billion in free cash flow and returned a generous $8 billion to shareholders. That's some serious cash back in your pocket. Investing in Coca-Cola means you're tapping into a solid, expansive network that's been quenching thirsts and delivering returns for decades. It's like having a refreshing drink on a hot day, always satisfying. So, if you're looking for a reliable, stable, and rewarding investment, Coca-Cola should be at the top of your list. Cheers to sweet, consistent. If you don't like surprises but still want steady returns, then P&G is your go-to stock. Procter & Gamble, ticker symbol PG, isn't just any company. It's a dividend dynamo, consistently raising its payout for nearly 7 decades. With a yield around 2.4%, you get both stability and a solid return. Why is P&G such a powerhouse? Think of your favorite brands: Tide, Pampers, Gillette, yep, all P&G. Their diverse portfolio keeps the cash flowing and your dividends growing. Investing in P&G means you're backing a company with a proven track record and a commitment to its shareholders. So, if you're looking for a reliable long-term investment, Procter & Gamble is definitely worth a closer look. Happy investing! If your portfolio looks like it needs a boost, you're a smart investor looking at ExxonMobil. ExxonMobil has been a rock-solid dividend payer for over 40 years. In 2023, they generated a whopping $55 billion in operating cash flow. And guess what? They shared the wealth by paying out $15 billion in dividends and stock buybacks. That's what we call a reliable investment. But wait, there's more. ExxonMobil isn't just resting on its laurels. They're investing big time in carbon capture and low-carbon solutions. This isn't just good for the planet, it's positioning them at the forefront of the future energy market. So, why buy ExxonMobil? Because it's not just about the now, it's about the next. A strong dividend yield, impressive cash flow, and forward-thinking investments make ExxonMobil a smart choice for any savvy investor. Join the ranks of those who invest with confidence. ExxonMobil, powering your portfolio for the future. I will show you how to get the best return on your investment with ATAN DT. Here's why you should consider this telecom giant for 2024. AT&T has transformed itself into a lean, mean telecommunications machine. With a stronghold in the US wireless market, it's no surprise they generated over $17 billion in free cash flow on $122 billion in revenue just this past year. But here's the kicker: AT&T offers a juicy dividend yield of around 4.2%. That's a solid return on your investment, backed by stable wireless service revenues and growing fiber broadband subscriptions. Investing in AT&T means you're tapping into a company that's not just surviving but thriving. They've positioned themselves for growth and stability, making it a wise choice for any investor looking for reliable returns. So if you're aiming for financial stability and growth potential, AT&T is the way to go.